We're about to dive into a quick technical analysis. In this video, we're going to answer one key question: in which direction is the next opportunity in the crypto market likely to emerge? What's the smarter move right now, looking for longs or looking for shorts? Let's start by discussing Bitcoin. At the price level of $91,800, we're observing a critical zone where Bitcoin has consistently held its ground against any kind of pressure. No issues whatsoever so far. Recently, we witnessed a climactic move, an extremely aggressive action, which becomes much clearer when we zoom in on the chart. And as you'll see later, we're giving a lot of weight to this particular event. For now, let me give you a quick hint. We believe this could all be a setup, a trap scenario we had been considering as a plausible outcome, something we've already discussed in previous videos. What's particularly striking is the sharp bearish aggression we experienced this Monday. And as you can see, it wasn't just Bitcoin. Ethereum showed a similar move, breaking through a key defense level in what appears to be another trap scenario. The same pattern was observed with BNB, and as you're seeing here, Solana and other cryptocurrencies followed suit. In short, this was an aggressive bearish climactic action. If we shift back to Bitcoin, and I promise I won't drag you in circles, let's take a look at the volume down here. What we're seeing is a significant increase in the number of transactions, especially when compared to the earlier phases of the market. Notice the volume I'm highlighting here. Throughout that previous phase, the transactional volume was relatively mild, but this sharp bearish move brought with it a surge in interest and aggression when it comes to trading volume. In other words, institutions, the big players who move large sums of money and seek to establish their positions, have been active. What's even more intriguing is that, through order flow charts, we've identified key points where clusters of transactional volume appear to dominate this climactic action. And in fact, a single cluster was enough to kick off the impulsive bullish move that followed. What this is telling us is that major institutions, the so-called smart money, had already positioned themselves for this bearish climactic action. We mentioned in previous YouTube videos that it made a lot of sense to anticipate this scenario. Here we're analyzing a structure that consists of an impulse, a channel, a range, and then a climactic action. So what should we expect for Ethereum and the entire crypto ecosystem? More downward moves in the form of climactic actions. These bearish climactic moves are likely to happen in areas that could be traps. Therefore, we shouldn't be alarmed if prices continue to drop. Instead, we'll need to pay close attention to how they behave in key areas, how they react at those levels. To summarize, what are we expecting for Ethereum? We're looking at the formation, or continued formation, of this range below the one we're marking here. This range could lead to a deceptive climactic action, essentially failing to replicate the original impulse. In other words, this next impulse might not measure the same as the previous one. Once that happens, we could see the setup for a bullish continuation. This scenario already made sense on its own, but if we later see a sharp V-shaped reaction with this kind of volume, and if we also identify a major cluster playing a key role, not just in Bitcoin but across the entire crypto ecosystem, it becomes pretty clear. This move was designed to hurt retail investors who were overly focused on a macro level, bearish continuation ideology. As I mentioned earlier, this isn't just happening in Bitcoin. Here we're looking at Ethereum's chart, where a bearish climactic action in this defense zone also made sense. And it's the same story. This candle, this climactic move with massive volume, as you can see below, also shows a dominant cluster. This tells us once again that this movement is no accident. This isn't a case of an honest, uncontrolled exchange of supply and demand. I think about it, how is it possible for so much volume to be concentrated in a single cluster, especially given the context? Considering that this climactic candle is strikingly dominant compared to everything to its left, the volume itself reveals the truth. Within that candle, we find a single, exceptionally strong cluster driving the action. To put it simply, this institutional candle is like saying, look, that's our target price. Let's hit the button to shift the market's direction. They press the button and everything changes. All of this taken together gives us a narrative of what might be happening in the markets right now. So let's evaluate and discuss what moves could be the most interesting for us, not just in the short term, but also in the medium term. I'll explain this further in a moment, but first...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Take a look at this. Notice what's happening on the BNB chart. On the 4-hour time frame, as we mentioned in previous videos, this level and structure were critical for us. We identified what could be considered a black swan event, something that encourages a generally positive outlook for BNB over the medium term. Here, I'm also presenting you with what we could call a demand line, where institutions might step in to defend this structure. As long as this structure holds, a bullish ideology should prevail. Only if we see a hypothetical break of this structure would we need to shift our perspective and pivot toward a bearish outlook. But until that happens, there's no reason to see things differently. Additionally, I want to highlight this defense zone. Similar to other cryptocurrencies, it has undergone an aggressive bearish climactic action. Remember, Remember though, that volume is always contextual. So when analyzing this aggressive climactic action, we need to compare it to the recent volume spikes nearby. Look at these smaller volumes, they're like kindergartners compared to this huge climactic action, which is like the grandfather of this chart, massive, dominant, and long-lived. What we need to consider about this action is whether there's truly a prevailing bearish force being orchestrated by smart money. And here's the question I keep asking myself: if that bearish momentum was so strong, why hasn't it been able to continue driving the price toward its supposed preferred direction? You just need to ask yourself this question as soon as you understand the interpretation of volume. Of course, we might be wrong in our interpretation. That's always a possibility, but if we're presented with a clear map that we can study and analyze, then we have to wonder, why hasn't this drop, which came with so much volume and seemed designed to destroy the market, continued immediately? Instead, we see a sharp V-shaped recovery. And as I've mentioned in other charts like Bitcoin, Ethereum, and others, we've observed a key cluster that has been able to reverse the market. This is a very significant event. Look at what we're seeing here with BNB. First, we've experienced what appears to be a trap. Now we're evaluating a recovery and potentially a test to see if the price doesn't fall too far. Sure, we can tolerate some drops, but we don't want it to fall too much. You get what I mean? As you'll see with other assets, this outlook only makes sense if these levels hold. From this point on, with BNB, we're already considering the possibility of bullish continuations for all the reasons we've discussed so far. Now take a look at DOT. I won't repeat everything we've already covered about climactic action since all cryptocurrencies are showing similar behavior. And as I know you've already noticed, there's no need to go over the same points again. Instead, let's focus on what's specific to Polkadot. First, let me remind you how much importance we placed on this structure. What we were targeting was the level of highest transactional volume within this bullish impulse. That high volume node established the price level we wanted to speculate on as a key boundary. That's exactly where the climactic action occurred, followed by its reaction. What we're currently observing in Polkadot is whether the price is being compressed against this high volume node with the potential to break upwards eventually. We're evaluating this possibility based on our interpretation of the volume. Take a look at these bearish attacks and pay attention to the volume, especially in the most recent climactic action, where volume made its presence clear. This is why, so often, after a climactic move, the price creates an impulse, looks for some kind of retracement, and then continues its trend. That's exactly where we're headed now, evaluating how far this retracement might go for the overall idea to remain valid. We've been very focused on this particular price point. At the time, what might have appeared to be a search for liquidity, seemingly algorithmic, was carefully considered by smart money. It's not surprising that this point has become a pivotal area before the trend continues. That's why we're treating this level as an important boundary. If it holds, we can maintain a broadly bullish outlook. As I've been saying, we're still leaning toward positivity. It's critical to hold this price level around 6,417. Now let's turn to Cardano. We're working within this micro defense zone, and I call it micro from a very broad perspective, considering we're analyzing the daily chart. As you can see, it tells us a lot about the present market conditions. If we zoom in aggressively down to the 1-hour chart, this is where we're assessing whether we might see a similar setup to what we discussed with Polkadot, potentially setting up for continuation. What's caught our attention is that on the 4-hour time frame, we've been able to draw a very clean and precise creek. If this ends up being a trap, it honestly wouldn't bother us too much, as we can interpret it in another way. This interpretation becomes much clearer on a lower time frame like the 1-hour chart, where we can identify a defense zone. Through cross-analysis, we can establish this as the boundary for a pullback within this bullish impulse. Remember, every impulse needs some time before continuing. In crypto, we've just come from an impulse, a channel, a range, and a climactic move. After that climactic action, we've already seen the first inverse impulse. What we're expecting next, based on this type of pattern, is a brief correction. That's exactly what we're speculating on to look for the continuation of this move. This leads us to think that Cardano, despite its climactic action presenting itself differently, aligns well with cross-analysis. It makes sense because it's actually very common to see a false break of the creek to grab some liquidity. They usually do this near a defense zone close to the creek, and if that zone isn't breached, there's a strong chance for continuation. And to wrap things up, let's talk about Bitcoin. You already know that with Bitcoin, we've been following the same pattern of impulse, channel, range, and climactic action, which we've broken down in detail. Here, we've identified a creek, a trend line that illustrates the potential compression with a trap very clearly. Now, after this impulsive break, it's possible they're forming a channel. We'll see how it plays out, but it wouldn't be the end of the world if Bitcoin decided to revisit the creek or grab some liquidity before continuing its trend. In summary, we remain positive overall. Pullbacks in the price might happen for the reasons I've explained. After a climactic move, the price tends to follow with an impulse, a correction, and then a replica. Let's see how far this correction could go, if it even happens, but I've already shared everything we're thinking in general about the crypto ecosystem. And as a bonus, let me mention Ethereum. It would be incredible to see a small trap here, a micro trap that could form before breaking out and continuing higher. This level on Ethereum could also be key. If you found this advanced technical analysis interesting, let me know in the comments. You don't forget to like the video, subscribe to the channel, and click the notification bell so YouTube can notify you of future uploads. Best of luck with your trading and see you next time.